Good morning, guys. Good morning. So yesterday we started market structure in depth. So today we'll just talk about how to identify a bullish market and a bearish market. Just two, then tomorrow we'll continue again. So I told us earlier, a bullish market is a market that is trending upwards, like just giving you same color candles. Easiest way to put it, going in one direction. So if you set your down candles to be red and your up candles to be green, you see more of green candles, more green, small red, more green, small red, like that. So it's giving you more longer impulsive push, shorter corrections, longer impulsive push, shorter shorter corrections, longer impulsive push, then shorter corrections. Then for the bearish market, the reverse of it, more red candles, small green candles, small red candles, small green candles, small red, like that. So you have a longer push, longer impulsive push, a short correction, longer impulsive push, short correction. So this is a bullish market. That's a bearish market. So let's go to the charts and look for something. Okay, let's say, okay, good, okay, good. No. Okay, let's say US oil. Let's work with US oil for today. Then let's work with the daily time frame zone. Good. Look at the daily time frame properly. What I just explained is happening here already. An accumulation phase happened here before now. This was an accumulation and manipulation phase. And after this one, we had this push. Then we saw a sharp doji, of which I told us doji tells you trend wants to reverse. So the trend has changed from bullish now to bearish at the sign of this doji. You can see the push. We had this nice impulsive push. That's how many selling days. Well, on the daily chart, we had 1, 2, 3, 4, 5 selling days. Then we had how many green? 1, 2, 3. Getting to the top of the green, the last green here, we saw a hammer formation. What happened? 2 selling days. So you have this impulsive push, little correction. Impulsive push again. Now we're in a correction phase. But this market is still bearish. Here again, told us you see more red candles. What do I mean? Impulsive sell to the downside, a little correction, impulsive sell, correction, sell again, correction, sell again, correction. Now, more sales. That's the bearish market bias. Then let's go to the 4-hour time frame. So let's see. Okay, the same thing here. Nice impulsive sell. More down, more red candles. Correction to the upside. Down impulsive sell again, small correction. More sales, small correction. More sales again. While in the correction phase. So this is an ideal bearish market structure. This is an ideal bearish market structure. Okay, let's work with this small stuff we have here. This small zone here. I know it's in the bearish market phase, but let me just explain the bullish market. Now, if you can see now, we have this impulsive push here, little correction, impulsive push, little correction, impulsive push. So this one is a mini bullish market inside a bearish market. This one is a mini bullish market structure inside the pro trend is bearish. So this one was just a bullish correction, then the trend continues. Same here. Market was bullish here. Yes. impulsive push, correction, impulse again. We have this correction and then this nice impulsive push to the upside. Here again, the same thing. Can see this impulsive push, small correction, impulse again, correction, then this nice impulse. So your bullish market will give you more green candles, small sell, more green candles, small red, more green. That's the ideal structure market. Here again, this is a clear bearish market. What do I mean? We have an engulfing candle here. This green candle engulfed this red candle. This red candle rather engulfed this green candle, signifying sellers in the market. Then we have this push to the downside, impulsive push here, plenty red, small green, impulsive sell again, correction, impulsive sell again, correction, massive sell again, correction, then this long sells. So that's that for the bearish market structure. Here again, the same thing, impulsive sell, correction, sell again. Then here we have this impulsive push to the upside. Here again, this is a nice bullish market. Impulsive push, small correction, impulse, small correction, impulse again, small correction, nice impulse, small correction, nice impulse to the upside. And now this bit now had this downward push. So that's that for the trend identification. What do you need to see? You need to see more of same color candles with larger bodies and larger lengths going same direction. Once you see plenty green candles here, small red, plenty green, small red, the trend most likely is bullish. Then when you see something different or a flip of this one, the flip of the other one, flip of the previous one, where you see plenty red candles, small green candles, plenty red candles, small green candles, plenty red, small green, like that. That is a bearish market structure. That's it. Okay, let's go. Let's do one more example. USD cards. There's no quick eight cards. Good. On this structure now, we can see because we had a nice bullish. This one is clear bullish market. And here, I have a nice bullish push to the up. Now let's go lower and dissect it. You look at this thing, look at these zones properly now. You see we have small reds, impulsive push here, small red, impulse again, small red, impulse again, small red, impulse, red color candles, impulsive push, small red. That's a bullish market. That's the simplest way to identify the trend. Just set your candles. Your down candles should be red. Your green candles. I told us how to set the trading view color candles. Right click on your stuff. Go to settings and you see symbol. The first one is your bullish candles. The next one is your bearish candles. So set them to any color you feel comfortable with them. When you see more green candles that are lengthy or they are forming much a particular direction with smaller red, you know you're in a bullish trend. Then, or you can even do color, what's it called, candle count. The same thing here. This trend has been bullish. Nice impulsive push, plenty green color candles here. We have small red, good. Nice impulsive push again, just two red. Nice impulsive push, that's a bullish market. Then getting to this point now, we saw a hammer formation. And I told us among the four candle trading, once the hammer, the 2G, or the three candle formation forms, there's most likely, what's it called? Trend reversal would happen. Here now you had a hammer form, coming here now, you had your three candle formation forming. So what am I trying to say? After the candle form now, we had an impassive sell, very nice sell, correction, nice sell again, correction, nice sell again, correction, then this sell. So that's the simplest way to understand the trend. Here again, the trend has been bearish. Nice sell here, correction, nice sell again, correction. We saw a doji here. This one is a gravestone doji and this is impulsive sell, small correction like that. So that's that on market structure. So on the next video, we'll talk about the points of interest and how to engage using those candles. So always identify which of the market phase you are in. Are you in a ranging market? What do? You stay put because you don't know the breakout direction. Are you in a bullish market? What do? You look for buying opportunities to the upside. Then are you in a bearish market? What do? Simple thing. Look for selling opportunity. So these are just the market phases. These are the market phases. It's either you're in a ranging market or a consolidating market. One, you are in a bullish, market, you are going up to, or you are in a bearish market. Either of these three will always form. Okay, guys, so drop your comments, ask questions where necessary, then I will respond. And in the next video, we'll talk about points of entry and how best to engage with those our candles. All right, guys, stay safe.